Hi, welcome to our YouTube channel. In this video, I'm going to share with you what are the new normals in trading the market and how you can cope up with the new norms to adjust to the new trading environment. Hi, I'm CY Song. Before I begin, if you would, please click on the subscribe button and turn on the notification bell so you don't miss any of the videos we are producing for you in this channel to help you improve your game as a trader. So let's get started. So what are the new normal that each and every one of us is currently facing is that ever since the global pandemic, there are a lot of changes that has been taken place in our lives. It includes our work, our home, as well as in our social life. A lot of things has been changes. So this includes things that when we go out, we need to make sure that we wear our face mask as well as keep a distance apart where social distancing is necessary. So all of these things are the new normals that we are currently having throughout our life that we need to adapt to. And when it comes to trading, what is the new normal in the trading environment? What is the new changes of the things that has been changed the trading environment? And this is where we are able to study the prices that has already been occurring in the market. So here in this video we will be study using the FCPO market. Over the past 10 years, what are the new changes in the market environment right now so we can adapt our trading approach to fit the market? So there will be two things that we will be looking into. So the first thing is actually on the intraday volatility, and the next thing is actually on the overnight volatility. So both of the volatility actually derives from the changes in price. One is intraday changes of price, another one is actually from the overnight changes in price. Here we will be studying about these two things. What are the new norms that has already been occurred in the trading environment? So first, let's study about what is actually the intraday volatility. So the intraday volatility is actually the difference between the high price as well as the low price. So the difference between high price and low price is actually your intraday volatility. So how you are going to get the intraday volatility is that you take the high price minus the low price for the same day. So this is actually the day range which we are going to use as our intraday volatility. So when it comes to intraday volatility, what are the changes overall that we can see over the past 10 years from year 2011 to year 2020? In this diagram, we are going to look at what is the intraday changes, what is the daily range, which is the daily high minus the daily low. What is the day range? On the x-axis is actually your year from year 2011 until year 2020, while on your vertical y-axis is actually the volatility in terms of points for each and every year. So here, if you do not know how to read this chart, it's okay as well. So what we need to look at is actually on the average line. So on and this black line is actually each and every year's average volatility throughout the past 10-year period. So let's look at what is the average volatility for these past 10 years. So here, what we can see from year 2011 is that the average volatility for year 2011 on average is actually 49 points daily volatility, and year 2012 the average volatility for each year is around 44 points. And this is where we are able to see we want to study what is actually the volatility throughout the past 10-year period. So here, let's look at the first 9 years, first from year 2011 until year 2019. So for the past 9 years, the average volatility was 38 points daily volatility. And here we can see that ever since the year of pandemic, year 2020, the average daily volatility has been increased up to 69 points. So here we can see that there is a significant increase of 82% in terms of our daily volatility. So there is a very new changes, and it becomes a very new normal in our trading environment, where we are currently experiencing a huge volatility in the market. So this is actually the changes for our intraday volatility for our Malaysia FCPO market. Now, let's look at what is the overnight volatility across the past 10 years in our FCPO market. So for the overnight volatility is actually the difference between the two trading days closing price. So it is actually using yesterday's closing price minus today's trading closing price. So the difference between two closing price is actually our overnight volatility. So let's look at what is actually the overnight volatility over the past 10 years for our FCPO market. So if you do not understand this chart is alright as well, because we are going to look at on the black line itself is actually the average volatility each and every year. So here let's look at this bar chart for what is the overnight volatility for the past 10 years. So here on the left hand side, year 2011, here we can see that the average daily overnight volatility is about 30 points in the FCPO market, and year 2012 the average overnight volatility is 24 points. So as we look across for the past 9 years from year 2011 until year 2019, the average volatility is actually about 22 points. So here we can see that in year 2020, ever since the global pandemic happens, the average volatility for year 2020 has been increased up to 39 points. So here we can see that there's an increase of 80% in our overnight volatility. So that is actually a very significant increase in the FCPO market. So here what we can see from our changes in price from our intraday volatility is that there is a 82% increase in our intraday volatility, and there is actually 80% of overnight volatility that has been increased in our market. So these both intraday as well as overnight volatility, this significant new increase is actually considered as a very high volatility in the market. And this high volatility, it becomes the new norm in our trading environment, especially in the FCPO market. So why does this new norm of high volatility happen in the market? What are the reasons behind that that causes this high volatility? So when it comes to a volatility, of course, it all goes back to the fundamentals in the market. It all goes back to the two major forces that causing the volatility in the market. So the two major forces in the market are actually the buyers, and on the other side is actually on the sellers. So when there are differences in opinion between the buyers and sellers, where both buyers and sellers, they have a totally different view about the market, so this is where it causes a very huge volatility. So the greater difference in the opinion between the buyers and sellers, the greater the volatility in the market. Now that you have already learned what are the new norms that has already happened in our market through the changes in prices, which is our intraday volatility as well as our overnight volatility, and how you are going to adapt to this new norm in our current trading environment. So as we have learned that the intraday volatility for the FCPO market has been increased by 82%. So for some traders, when they see there is a huge spike in intraday volatility, they will perceive the market as having a great risk, because especially if you were to be in the wrong position, you would incur a lot of losses. Whereas for some traders, they would perceive this increase of volatility as an opportunity for them to enter the market, because when there is more volatility in the market, you would be having more trading opportunities, as well as when there is large changes in price, you have more opportunity to make a profit from the market. Whereas for overnight volatility, same thing as well, there is a huge increase in the overnight volatility, especially for year 2020. So for some traders, when they look at the increase in overnight volatility, they are not willing, or they are afraid to hold their position overnight. So this is where you can see that they would prefer to trade only the intraday, and they close out their position by the end of the day. So they will perceive holding position overnight as having high risk. Whereas for some part of a trader, especially if you were a trend following trader, or if your strategy is actually using the trend trading strategy, so this is where this category of traders, they will perceive the market as having a significant opportunity to hold their position overnight. So this is where when they hold their position overnight, they will be able to capture the overnight volatility throughout the short term, medium term, as well as the long term trend. So when you are able to trade overnight and hold your trades overnight, so this is where you will be having the opportunity to profit from the market through the high volatility as well. So how are you going to go through this new norm in this new era of trading environment ever since the global pandemic? Most businesses have to adapt to the new changes in the new environment in order to survive. There are a lot of changes in the traditional business model as well. So same thing for us as traders, we need to learn how to accept the new norm as our trading environment, so that we are able to adapt to it. So the first thing that we need to learn how to cope up with the market is that we need to accept the fact that, all right, the market is having an increase in volatility, and we do not have to be afraid or stay away from the market. And next thing that we are going to do is that since we are unable to change the behaviors of the market, we are unable to control what is going on in the market. So instead of resisting the new changes in the market, why not we just embrace it and be flexible in our approach in trading the market. So this is where we need to learn how to adapt to the new changes in the market. So remember these two A's, these two things: accept and adapt. So with the two double A, accept and adapt, how are we going to go through with this new norm in our trading environment? So the first thing, again, we need to accept that high volatility has been a part of the market already, and through high volatility there is opportunity for us to trade the trend and profit from the market as well. So high volatility, if you were to perceive it as an opportunity in the market, and of course this is where you need to adapt to the new changes. So this is where we as a trader, we are unable to change the market, right? So might as well we adapt ourselves with the new changes in the market by revising our trading plan. So this is where we can change our trading approaches. So let's say if your previous trading strategy does not work, then you need to revise your trading plan to adopt the new changes in the market, so that you can continue to profit in the market. So remember this double A rule: accept and adapt, so that we are able to follow the trend in the market rather than going against the trend. If you find this video informative and useful to you, please share this video and don't forget to give us a thumbs up. And please don't forget to click on the subscribe button and the notification bell, so you won't miss the free trading videos that we will be posting up to help you to improve your game as a trader. Until next time, this is CY wishing you good luck and good trading.